What's up, everybody, and welcome to our next episode to KIO Macro. Guys, we just shot the whole episode and realized we weren't recording, so we're going to try to make this one a little better. Isaac, how you doing today, man?
I'm doing splendid. I just did some practice for this call that we're doing, so I'm ready to go.
All right, guys, so we're going to run through the markets. Things are pumping, things are green. We're going to give you our opinion on if we think it'll continue, go over some Bitcoin ETF data. JT isn't with us today. He's not dead. He's just not with us, but he was nice enough to record a little excerpt that we're going to clip in here at the end on his thoughts on the market. So I'm going to go ahead and share my screen, and we're going to get into it. All right, so per usual, you got the United States Central Bank balance sheet trending downwards. They're offloading bonds. This is a good sign. You got the M2 money supply still here pretty stagnant. You have gold consolidating near all-time highs. Or I wouldn't even say consolidating. Look like it's trending upward here, and we're on the monthly. You got the S&P at new all-time highs again. You got the Dow at new all-time highs again. You got the NASDAQ at previous all-time highs that it wasn't at since December of 2021. You got Apple consolidating near all-time high levels. You got Coinbase back within this channel here. This is the only stock that I'm buying. And then you have Bitcoin at the 50K level. Now, guys, you can see this meteoric rise in anticipation of the Bitcoin ETF getting approved. Now, this approved, we're going to go over some data here pretty soon. But what I would want to see in order to confirm that we're in a bull market is confirmation of the trend. Like the market likes to move between these ceilings and floors. So I want to see it break above this level, come back down and retest it, and not just retest it, but print a nice big green candle and close above the 50K level. Evidence of that is if you look at the 2020 or 2017 bull market, when we saw Bitcoin hit 20K, if you look here, once it surpassed that level, it broke, it retested. Here, let me go down to the weekly just so you can see it a little better. We saw a break and we saw a retest. You can't see the retest as good because we're on the weekly. If we went to the daily, you'd be able to see it. But you see how this green candle closed above here, and then you see what happened after. Same thing here. We saw a break and retest above this 30K level. This green candle printed, and then it was off to the races. And it's actually the same thing on the downside. We saw a break, we saw a retest, and we saw this red candle close, and then we saw this precipitous drop. Right now, let's look at some Bitcoin ETF data here really quick. So if we look at this, you can see the iShares Bitcoin Trust at the time of this chart did 223 million in volume. We saw Fidelity do 120 million, and Grayscale, the laggard now, 119 million, right? And this is number 15. And if we go to this next chart, you see the iShares Bitcoin Trust did 750 million in volume, and it did more than the gold ETF, guys. And it's number 15 amongst all of the ETFs. And lastly, we show this chart on a weekly basis. We talked about how most of the volume from the ETFs was people selling their Grayscale ETF to get into other ETFs because the annual fee is lower. You can see they're $1.50%, and all these other ones are 0.25, 0.30. So most of the volume was actually people selling the Grayscale, getting into these other ones. And these is what these red numbers are for. But now we're actually having positive outflow. So with that in mind, we had 361 new Bitcoin on the 19th, 260 on the 26th, 1,741. But now here we are on the 7th, we had $3,135 of new Bitcoin bought from probably institutions, maybe some retail too, 8,000 on the 8th, and then 12,164. So without Grayscale, 216,000, but you don't really want to factor that in because we already talked about why. We're seeing a net of 62,536 Bitcoin come onto the market, and you see all these green days here of new Bitcoin being bought. Guys, only 900 Bitcoin are mined per day. If these numbers are able to be sustained, I'm pretty confident that we're going to go into a bull market and things are going to stay green because you can't deny the supply and demand. We look at ETH, you see it still trending upwards. Same thing, this $2,700 level has been pretty key. We're just going to keep our eye on these trends. This is an important one here, guys. This is the total crypto market cap, right? We're looking at the weekly. Now, what I want to see to confirm the bull market even more is a break, a retest. We're already retesting right now, but I want to see that green candle close above here, right? You saw that same thing here, break, retest, saw that green candle. It was off to the races. Same thing here. Like it happens every single time, but at least we're above the level. We're way above our 200-day and our 62 EMA. I wouldn't be surprised if we came back within the channel and retested. I do still think we're going to have one more correction, but I do confidently feel like we're going to be in a bull market this year. The Fed isn't planning on lowering rates, at least so it seems. They're going off of the data. We're in an election year. We got the Bitcoin halving right around the corner. And then, you know, we've already seen crypto drop 80%. Like we saw this major drop. The stock market hasn't had its full correction yet. So we could see an environment where cryptos pump and stocks dump. Also, you have stablecoin dominance dropping. And for those of you who are watching this channel for the first time, when this number is going down, that means people are selling their stable coins for altcoins. And we're getting back within the channel where it was when we were in a bull market, right? And this is Tether. This is the largest stable coin. This is Tether dominance. Same thing with USDC dominance, just going down, down, down. And if we look at some of the altcoins that we've been talking about on this channel, we called out Pendle Finance back in November. If you listened to us, did your research, you could have made some good money. It's up. I'll take it from the middle one. We're up right now 370%. And these red lines are where we've taken profits. Maple starting to pump. I made a video on how I plan on turning 15K into $1 million conservatively. You see Arbitrum pumping back to where we took profits. Same with Optimism. We see Chainlink pumping out of its trend. I thought we were going to come back down, but I guess not. We made a video on Chainlink as well. And, you know, the markets are just pumping. If we look at the altcoin market, this was starting to trend downward, but now we have this tick up and we're back at these previous all-time high levels, not all-time high levels, recent all-time levels. So if we stay above the 62 and we keep trending upwards, hey, I can't deny what the charts are saying. Isaac, what's your thoughts on everything, man?
Yeah, I'm generally feeling pretty good about the market right now. And I think a lot of other people are feeling the same. I think that a big issue that we've seen recently, and this is something that came up in one of my favorite YouTube channels, Money and Macro, is the idea of the vibe session. You know, if you've heard about this, people have been talking about the vibe session. This idea that the economy seems to be doing so well, you know, we see real GDP going up. We see, like, you know, unemployment numbers not really being, you know, what you would assume in an economic downturn. Like everything seems to be going fairly well. The stock market's hitting all-time highs. And this is also with inflation coming down. So other than not even a soft landing, we had like a no landing scenario. Like there was no real downturn economically that you would expect to come from Fed actions that would bring down inflation. But people still polled generally feel as though the economy is not doing well, despite all of these great on paper, you know, faculties. And a big reason for that is something I've seen is that real wages have only recently, as of Q3 2023, actually been able to meet the real wages before the pandemic started in 2020. So we have been in something kind of like a recession for the past like 3-4 years here when it comes to wage growth. So a lot of Americans seeing inflation skyrocketing during this period and their wages staying largely the same and then dropping for, you know, a few years here, they have felt as though there has been a recession because to them, their economic stature has not been growing. But I can positively report right now that that has changed. We now are in a period in which real wage growth has surpassed pre-pandemic levels and seems to be accelerating. So I think as a lot of people see their real wages growing and inflation now being meeting like kind of a level playing field here, you'll see a lot more people more positively engage with the economy and make more long-term investments, which I think is going to add even more fuel to this current boom that we seem to be in. The only thing that could derail this is some sort of major banking calamity, something breaking, black swan events, etc. But in lieu of that, I see a lot of positive things on our horizon.
Yeah, I got a feeling it's going to be a good year. I guess we'll just have to play it month by month and see what the Fed continues to say. But it seems like they pulled this thing off.
It seems like it, knock on wood. You know, definitely month by month. The current CME betting markets for the Fed rates in March are 85% no change. Though it is important to note that we are approaching the 8-month period, which is the average period between when the Fed stops hiking rates and when it begins to cut rates. So the average period for a rate pause is about 8 months historically for the Fed. March will be at that average 8-month mark, meaning that it's very likely, or historically likely that we are in the rate cut territory. CME does not seem to think that we're going to hit that in March, but every month after that, we're expecting more likely for there to be easing than no change. So that's going to, if we do actually end up seeing some rate cuts, I mean, that's going to add further fuel to this seeming economic boom that we're in.
Yeah, if they start to lower rates and nothing's broken, I agree. But if something breaks and they start to lower rates, I think things can get worse.
Yeah, in lieu of something breaking. And there's some signs that we could see something break. I mean, I know consumer debt is at like 2008 levels right now. This is like debit card, credit card debt. That's not good. I know that a lot of local and regional banks have been dealing with a lot of extraneous losses, like unrealized losses and stuff. So there are certain things that collectively could break, but I don't know. I'm not really seeing a major catalyst like we had in 2008, which is why I'm saying outside of like a black swan event, it seems like we're going to be having positive economic growth for the foreseeable future here.
I'm glad you brought that up. With 2008, we all know about the mortgage-backed securities. That bubble was mostly formed from retail people trying to get mortgages under their dog's name. Like the federal, every boom and bust can be traced back to easy lending policies by the Fed. So back in 2008, anyone can get a mortgage, low rate, but they were getting those variable rate mortgages. And once interest rates rose, that's how they got fucked. The difference this time is that we're in a corporate debt bubble. So once they printed all that money after Moneybag Joe said it was going to be a pandemic, corporations were able to borrow money for really, really cheap. So now the bubble is in corporate debt. But the good thing is corporations are a little bit more capitalized and responsible than retail people trying to get a mortgage. So they're better able to handle the debt because they're smarter and because it's a company with more money. So that kind of makes it all make sense.
Very true.
Yeah.
I concur.
I concur. There it is. Oh, no. I'm in accord.
I'm in accord. Yeah, I am in accord with what you are saying.
I'm going to say that around my family, just a bunch of black people. They'll be like, what you think about that? I'm going to be like, I'm in accord. They'll be like, what the fuck you just say?
Oh, would that not go over well?
They'll just be like, what are you talking about? Like, why can't you just say you agree? Like,
well, yeah, I'm in accord. I did say I agree. I said I'm in accord. What's the issue?
I'm going to try that when I go home. Now for our regular scheduled programming with Jay Manchin.
Yeah, sorry I couldn't be there, but I at least wanted to provide a quick take on Bitcoin crossing $50,000 for the first time in a while here, because this is something that we've talked about a bunch on this podcast in terms of using liquidity as a proxy for Bitcoin price action. So I think that this recent move is actually a little more divergent from global liquidity, and I think it's more based on, ETF inflows, honestly. But this move, I think, will be sustained. Of course, you're going to have some downside volatility. I think this move will be sustained because we are expecting liquidity to pick up in the next year, especially if the Fed starts cutting rates and we start having, interest rate QE around the world. Well, of course, that frees up some capital to be played with. Even though we'll have balance sheet QT, I think they're just going to keep slowing that pace, and QE will outweigh the QT going on in the background. And I think we'll still have, a good amount of fiscal spending as well, so the consumer will stay strong. And so, even though I think this latest move was more based on, ETF inflows from these major institutions, I do think that demand based on liquidity will continue to increase, and you can kind of see that in this chart here.
Thanks, JT. We really appreciate that, man. We really appreciate that.
Wow, so insightful, JT. Thanks, man.
Bravo. Give him a warm.
You know what? This guy's on to something. I'll tell you that.
See everybody.
Wow.
But with that, guys, we will wrap this video up and conclude it for the second time. We hope you guys got value. If you did, please consider subscribing, drop a like, drop a comment. Let us know what industry or topics you want us to cover next week. But until then, we'll see you guys on the next episode. Take care and trade safe.
Peace out, Girl Scout.